We have broken the upward trend line on the daily chart of the DXY. The big question now is, will we be pulling back down to that daily demand zone? We are still somewhat bullish on the dollar due to the fact that we have a monthly demand zone that is in control. So looking at a 4-hour chart of the DXY, you can see a beautiful downward trend. But when we throw a channel tool on this trend line, what do you guys notice here? We are very, very overextended to the downside. We are basically sitting at the bottom end of the channel. We have been hovering around there for a couple days now, and I was really hoping we could see a pullback towards the 50% mark of that channel, because looking for day trading shorts would be preferred. I think we could recover just based off of the whole concept of, we are due for a pullback, even though it doesn't mean we are due 100% for a pullback. But again, we will be monitoring this 4-hour trend line on the top right chart there. We will be monitoring that trend line to determine if we are going to pull back down to this daily demand. That's at 97.88. So I've been saying on the dollar, we are bullish as long as this trend line's holding. If the trend line breaks, I will be somewhat bearish on the dollar from when the trend line breaks all the way down to our daily demand. And then we could be looking for day trading shorts down to that daily demand. And then once this daily demand gets hit, longs on the US dollar pairs will be higher odds once that daily demand gets hit. And again, the whole reason I'm bullish on the dollar is due to the higher time frames, the monthly chart and the weekly chart as well. If we break this daily demand zone, that's definitely going to be a sign we are potentially headed lower on the dollar, and then we'll have to maybe reassess our higher time frames. But again, as long as this 4-hour trend line's holding, we could see a pullback towards the trend line again, and then maybe eventually get a pullback down to that daily demand. And if we do react off of that daily demand, where I think we are headed going to the weekly chart is up to this weekly supply at 103.06. That is where I think we are headed. And look, if we push down again on this weekly chart, this weekly demand has been so tested that I'm not really expecting to see it hold for a third or fourth time here. I'm expecting it to break. But if we do see more dollar strength, I think we're easily headed up to the weekly supply at 103.06. Looking at the Euro US dollar, you can see we are so close to this daily supply at 117. So we still could be looking for longs on the euro as long as we haven't contacted this daily supply. And as soon as the daily supply is hit, longs become much lower odds. So as far as trading the Euro US dollar goes right now, let's talk about it. Well, we did have a very nice supply zone from back here. Full disclosure, this was a zone I was pointing out. It did break here, but wider stops could have made you have you at a somewhat of a break-even trade. So that zone broke, and that left us with this demand zone down below at 115.99. So it's a beautiful rally, base rally, single candle, kind of a hidden zone. I like it for longs. So as long as this trend line's holding, we could be looking for longs on a 15-minute chart. But again, let's throw a channel tool on this chart. It'll really show us if we are overextended or not, and we clearly are. Just like the inverse of the DXY, we are hovering around the upper end of that trend line, or the channel rather. So pullbacks near the 50% mark of the channel or lower are definitely preferred for 15-minute time frame longs. And then if we continue to push down, that is our demand zone for a potential long trade at 115. If you're bearish on the euro, I'm really not seeing a whole lot of trading setups until we can get something like this. Let's say we break the trend line, we break the demand. If there's a supply zone there, that supply zone is going to be pretty good for a trade to the short side. But for now, as long as this trend line's holding on the euro, as long as this 4-hour demand zone's holding, we're going to be bullish on the euro US dollar. Alrighty, on to the forecast for gold. Clearly some sort of recovery here that's happening on gold. Nothing crazy. We haven't seen, extremely bullish weeks, but we can't deny the strength we have been seeing here. And I've been saying this for a while as well. Even if we do break down here on gold, I think we could bottom out around just below 34.75 on gold. There's a monthly demand zone sitting there, and I think that's where we are headed if we go lower. We're not really seeing any evidence of that just yet. Daily chart really isn't giving us much either, but the 4-hour chart, we actually have a pretty good trend to base some trading decisions off of. So let's throw a channel on this trend and on this trend line and on this trend, whatever you want to call it. What do you notice? we're at a decent point to continue to look for day trading longs on a 15-minute chart. So as long as this trend line is being respected, which it is, and as long as we are below the 50% mark, 15-minute time frame longs are going to be good. And that means however you trade, whether it's supply and demand zones, support and resistance, chart patterns, whatever, day trading longs are good as long as the trend line's holding. Let's say we break this trend line to the downside. If we have a supply zone there, that's going to be our potential short trade to maybe catch a maybe another move to the downside. That's going to be our short trade. And that is a zone I will have on my charts for all of the Diamond members throughout the week. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So for now on gold, all revolving around this trend line. As long as it's holding, day trading longs are good. If we break it, any supply zone there would be good for a potential short trade. On to the forecast for the S&P 500. We have clearly seen a great recovery here on the weekly chart. Two very bullish candles the last couple of weeks here. Kind of a bummer. I really wanted to see a pullback down to that weekly demand just for, long-term investments. It's just an amazing pullback. And look, I'll be very clear. It is still possible we do pull back down to that. I don't think we're out of the woods yet. I'm not going to get into economics and all the stuff that's going on in the world, but we could even see a pullback down to that area of demand on the weekly chart. Not really much to go off of here on the daily, not really any trend lines or anything, but the 4-hour chart and the 1-hour chart are somewhat promising. What do you notice? Beautiful 4-hour trend line to the upside. Channel tool shows that we are somewhat overextended as far as this channel goes. We are sitting clearly above the 50% mark. So if you're a day trader and you trade the 15-minute time frame, as long as this trend line's holding below the 50% mark in this area, longs on a 15-minute time frame are going to be good. Let's say we break this area of demand or this trend line. I'll be somewhat bearish on the S&P until we can contact either one of these demand zones. I'll be very clear. This is our preferred zone because not only is the move away here better, but also this zone will act as somewhat of support liquidity, stop losses here. So I am putting more faith in the zone that is lower at 64.25. But how I would be playing this, these two zones, let's say you just wanted to take both, you just absolutely need to trade both. What I would do is I would have pretty much a 1-to-1 risk reward on this trade, and then on the other trade below here, somewhat of a wide stop would be preferred. You could actually get a bigger move off of this zone. I'm talking 5-to-1, 3-to-1. Let's be realistic here, right? 5-to-1, the bigger move, in my opinion, is going to happen at the zone that is lower. Again, for the two reasons that the move away is better here, and this zone is going to act as liquidity. But it doesn't mean we can't get a quick one off of this and then get the bigger trade off the one that's lower. So that's how I'd be playing the 4-hour chart on the S&P 500. And then on the 1-hour chart, if you want to be more aggressive with your trading, we are pretty overextended, like I was saying, but we do have a decent little rally-based rally demand at 67.89. So if you are really bullish and you want to get maybe a quick little long trade there, I think that is a pretty good demand zone at 67.89 for maybe a quick 1-to-1 or a 2-to-1 trade. On the USDJPY, on the weekly chart, you can see beautiful weekly upward trend line that is being respected. Yes, we are somewhat overextended, but this trend line is definitely a bullish sign. So that is our preferred trend as far as swing trades go. On the daily chart, we have a pretty good daily demand zone that is down below at 156.15 as well. So even if we do get a pullback, that is where I think we're headed, and that is where I think we could bottom out at if we do indeed see a pullback on the USDJPY. We do have a couple of trading options. So if you are bearish, This is our trend line for day trading shorts. So if you are looking for day trades, this is our downward trend line. You can see we are actually above the 50% mark at a decent spot to look for day trading shorts on a 15-minute time frame. So again, as long as we are above the 50% mark and this trend line is holding and we're in this area, 15-minute time frame shorts are going to be good, but it has to be on that time frame as our guide. If we break the 4-hour trend line, any demand there is going to be a great pullback entry because remember, the weekly trend is up. So we are looking for a pullback entry, but first we need to see a zone formed by removing that trend line. That's how I'd be viewing it on the 4-hour chart. If you are looking at it on the 1-hour time frame, you can see we have a pretty good 1-hour supply above. This supply broke an upward trend line at 159.58. So if you're bearish, that is our supply zone for a short trade. Remember, the higher time frame momentum and trends are up, so I am not saying we should look for a massive trade off of that zone. I am not saying that. What I'm saying is I think this could be good for a quick one, maybe a 1-to-1, maybe a 2-to-1, depending on how aggressive you are with your stop loss. But if you do get a 1-to-1 move, stop should be at least at half risk or break even, or take like 80% of the trade off, because I think we are going to see somewhat of a small move off of the zone, not a massive one. If we break that supply, any demand there is going to be good for a long trade as well. And if you guys are enjoying this video so far, make sure you hit that like button and subscribe so you don't miss another forecast. Thank you. Alrighty, looking at the GBPUSD this past week, we have clearly broken the downward trend line, so we are definitely bullish here. But there's a difference between this and then something like this where we can create a very nice daily upward trend line. Trend lines sustain price. This is just the initial stages of bullishness, which is what we are seeing on the British pound. There's really not any zones and there's really no trend lines, unfortunately, here on the British pound. So this is going to be a pretty boring one. Momentum is up. I do think longs are somewhat preferred right now. The issue is we don't really have any trend lines to go off of. So what we are going to be looking for is simply a break of this high. If we can break this high, we will have a trend line here, somewhere like this. And then that trend line will be our guide for day trading longs. But for now, as far as my chain analysis goes, maybe you're pointing out this zone, whatever, that's fine. It's not in my chain analysis. The chain analysis is what we go over on the Sunday meetings. That's how I get my edge. But I just don't have any zones here based on my chain analysis. It just didn't work out that way. So I'm not going to force anything here in the British pound. For now, we're waiting for that high to be removed and create some sort of trend line and some zones here. But for now on the pound, it's really not tradable as far as I see it. Alrighty, on to the USDCAD. On the weekly time frame here, you can see we have a weekly supply and a weekly demand. We are clearly just sitting in the middle, so close to hitting that supply. We haven't hit it yet. So if you're bearish, our profit margin is to the weekly demand at 1.37. If you are bullish, our profit margin is to the weekly supply at 1.39. And depending on the time frame, those could be long-term profit targets. If you're trading a 1-minute chart, those are very big trades. So we want to be definitely mindful of that. On the 1-hour chart, really just terrible looking chart. I mean, the trend lines are very not good at all. This downward trend line here, very small, usually not my favorite trend line. Clearly breaking above it. It's not removed yet, but to me, it is looking like we are going to head up. And where are we headed up to? Well, in my opinion, we are clearly headed to the 4-hour supply that's sitting above. So if you want to trade short the USDCAD, this is our supply zone for a short trade at 1.38. Remember, like I said, the weekly supply zone was above, so I think that is where we are most likely headed long term. So I'd be somewhat aggressive with trade management off the zone, meaning don't get greedy, don't look for a 5-to-1 trade. But I think we could see a 1-to-1, 2-to-1 move off of the zone. It's nice. Drop, base, drop, hidden one, move away is very good. Broke a trend line. That is our supply zone for a short. And if we break the supply zone or the downward trend line or both, any demand there is going to be a preferred long opportunity. Looking at the forecast for the Aussie US dollar, weekly demand down below. Thought we were going to pull back down to it. Unfortunately, we have not. Kind of unfortunate. Still think it is somewhat possible, but if we do, that is where I think we will be basing out and seeing a big move to the upside. As far as trading the Aussie US dollar goes right now, we did catch a beautiful quick trade. This is what I always talk about, aggressive trade management off of that zone. You can see on the screen, this trade was called out before it took place in the daily market breakdown video, which are basically the daily forecasts that I release every single day for the Diamond members. And beautiful move off that zone, came back in for a second touch. So Maybe some of the members are break even on this trade, which is still fine. We knew not to be super aggressive with the zone because it just wasn't that great anyways, and we were very, very overextended. So if we break this demand, it's already a proven area of demand. So any supply there would actually be a pretty good shorting opportunity. So that's what we'll be waiting for potential short trades. For now, for longs, I'm not really seeing any new zones, but we do have a very nice upward trend line. This trend line, though, is very overextended. We have not only at the upper end of the channel, we have floated above it. So we really need to see a pushback in below the 50% mark towards the trend line. Then I think 15-minute time frame longs are going to be good again. All right, looking at the forecast for the USD Swiss, this weekly supply zone, we did just barely wick above it, but it's held beautifully here. Bigger, it's more than I expected. I still think we are going to be breaking it because, again, when we kind of zoom out and pan out here, we are so overextended. We are, quote unquote, I'm doing air quotes, due for a pullback here. But I think it's even possible we do retrace all the way down to this daily demand. So we could see a bigger move than I thought down to 0.77, and that'd be a great opportunity for a swing trade long. But that's where I think we could be headed. I'm not saying 100%. We might even kind of base out here around the 0.782 area on the USD Swiss. As far as trading it goes now, we have really a couple of options. We do have a 1 hour trend line to the downside. As long as that's holding, you could justify looking for shorts on a 5-minute time frame. If we break that trend line, it's most likely we are headed up to this little hidden drop-based drop supply zone at 0.79. So if you're bearish and you want to trade a 4-hour supply zone, and what is this 4-hour supply zone? Remember, 4-hour supply as a weekly supply is in control. So this 4-hour supply is a confirmation trade, guys. So it's a pretty decent supply zone for a potential short trade to see a move to the downside here on the USD Swiss. On to the forecast for crude oil. Weekly chart and daily chart, very difficult to read. It's really just showing the pure chaos that we have gotten. So we'll keep it very, very simple here on crude oil. And look, if you took a loss in this drop, if oil's been tricky for you to trade lately because the move's up and the move's down, I understand. That is all part of trading psychology. And if you guys need help with that, check out my podcast, the Stoic Trading Psychology Podcast. It's available anywhere you get your podcast. It's also on YouTube as well. So as far as oil goes now, we really only have two options. So if you're bearish, our supply zone is above for a short trade at 114.78. If you're bullish, we want to wait for that supply to be removed, and any demand zone there would be good for a long trade. Last but not least, we are on to Bitcoin. Reminder, monthly demand and control on Bitcoin. That is why I think we will be at least headed up to 89,380 to retrace to either one of these weekly supply zones. So it's no wonder we have seen Bitcoin be very, very well respected. On the daily chart, though, we are clearly just ranging here, really not, super bullish. But if we do remove this blatant high here, we will have somewhat of a trend line, and that trend line will definitely be evidence to suggest that the monthly demand is being respected. As far as trading Bitcoin goes now, we do have a couple of options. We have seen this supply zone come in contact. This is the supply zone I've been pointing out for a while now at 72,091. We've already seen somewhat of a move off of the zone. And again, based off of the fact that our higher time frame monthly demand is in control, this was an aggressive trade management trade, meaning you probably should have been break even at this point. Or if we do get another pullback to the downside, I would definitely put your stop at break even, or even a 1-to-1 take profit was potentially hit as well. As far as trading it goes now, as long as this trend line's holding, you could justify looking for 15-minute time frame longs. If we remove that supply, any demand there would be good for longs on a 4-hour chart. The 1-hour chart is somewhat promising as well, as we do have a pretty nice 1-hour trend line to the upside. As long as this 1-hour trend line's holding, 5-minute time frame longs are good. And what do you notice? We have a little hidden base rally area of demand down below with this clear area of support, which is going to be liquidity. So if we do get a pullback now of that demand, I think that's where we could see a move off of at 69,916. That is our nearest pullback entry for a long at a demand zone. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that, as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.